Good morning, Daily Rip crew. Hope the chat is doing well
We
this
on?
morning. We got things moving pretty fast. CPI came out this morning. We had CPI year over year and month over month came in line, but the core CPI year over year and month over month was slightly lower than the forecast. So we're definitely seeing the markets get a nice bump to the upside here. Shy, how are we feeling about this print here? The markets are moving fast. It really didn't give anybody a chance to, if you were trying to catch this move, you really didn't have a chance to get in after that print. So curious on how you're feeling. I know everybody's kind of just getting slapped with green in the face this morning, which is a good thing, of course. So how are we feeling about this morning?
I mean, this morning's numbers were Goldilocks like. The core CPI was better than expected. PPI yesterday was cool. The narrative I've been saying on the show consistently is it's a 10-year yield. That's where the eyeballs are going. We have a strong dollar. Anything, if the 10-year yield's approaching 5%, that's going to be ankle weights of any kind of recovery we're trying to see in the market. Right as soon as the CPI got released today, it went from 4.8 to 4.7. Now it's at 4.68%.
Yeah, TNX
It's
sitting at
trending in the
4.6 now.
it's trending in the right direction. That's something that did not occur during the PPI yesterday. Even on a cool PPI print, it went lower, then all of a sudden went to the high of the day. And that was my initial tell of like this market rally we're seeing pre-market is going to fade. This is not the case anymore. So we're seeing the true benchmark of this. We might see a recovery. QQQ has been corrected itself 8% already. Now that the 10-year yield is recovering a bit and becoming less stubborn per se, and now the dollar is also weakening, which was always the boogeyman for Q1 earnings for me. For this upcoming earnings season, the strong dollar was the boogeyman for me. So now that is getting a little better, and we're just seeing a recovery. So that's my perspective. But also, we have a Wall Street OG, Daniel, joining us today. So I want to hear Daniel's opinion about the CPI print and the pre-market action right now.
Yeah, good morning. Good to be with you guys. I've been watching for a long time, enjoying your show, enjoying how you guys are disrupting the space and bringing a cool new way for people to consume and stay in touch with the street. Between stock twits and what you all have on X, it's a lot of fun. Look, I have a two-sided opinion here. I mean, as someone running a company out there and dealing with business in the real world, I struggle, or just being out there and buying stuff at the grocery store, I'm kind of like, is it down? Is it cool? Is it tame? But everybody's got to remember that, when we say 2.8, 2.9, that's still how much it's rising. So it's not, so what we've really seen is a slowdown in how fast things are inflating. And for the market, I think that's good enough to indicate that the Fed pivot is still potentially on. I mean, we saw a lot of adjustments come out of the banks. There's going to be no more rate cuts. There's going to only be 2 rate cuts this year. And I think this maybe would reinvigorate some of the spirit that there might be 1 or 2 more rate cuts this year. But at the same time, I mean, we are really in this interesting predicament right now. You still have high rates. That means people can't buy homes. They can't sell their homes and necessarily buy bigger homes. They can't buy cars. We've got this new election, this tariff thing looming. So there's so much out there. But I tell you, it's really never a good idea these days to be on the wrong side, which being a bear seems to always be the wrong side. You have like a minute to be a bear, and then it's all bull from there.
Well, can I ask you, like, do you think what I think is being priced? I agree that inflation, like being up 2.8%, like this is year over year. It's still up significantly from 3 or 4 years ago. Like people are struggling out there in the real world. Do you think the disinflationary nature of agentic AI is kind of being priced in, where something drastic is going to occur in the society that's going to be deflationary? So like, even though we're seeing the struggle right now, like it's going to be a different environment in 5 to 10 years.
Yeah, so I've talked a lot about this actually 2 years ago, like in mid 22, right before things really collapsed. I came out and I'd had a lot of conversations. One of the cool things in my job is I spend a lot of time talking to CEOs. So I spend time with the likes of Jensen, Bill McDermott, Mark Benioff, CEOs of the chip companies, like Lisa Su. And I said, tech is super deflationary. And so the real hero that was going to get us out of that recessionary period of time and where really the market was pulling back was going to be the implementation of technology. Having said that, that sort of deflationary nature tends to have a double-sided impact. The first impact is generally like more of a efficiency gains. So when I said about the whole generative AI boom has all been efficiency gains. And we've done a ton of studies on this. We've talked to over 210 CEOs running companies over $1 billion a year to turnover. Look, it's a prune to grow strategy. Companies went first on cuts. They got lean, they got efficient. 2024 headcount numbers of the biggest tech companies in the world is actually lower than 2022 right now, but earnings are growing. So as we know, companies are finding a way. So agentic, Shy, to your point, we're only at the tip of the spear. They were already looking at AI as a massive cost-cutting center, just kind of the traditional analytical AI, the first level of digital assistant AI. We haven't even thought about how agents really factor into this yet, but I think these companies can keep growing earnings with very little headcount add. And we're seeing that with comments from Microsoft, Meta, and other companies right now. They're basically saying we're going to cut low performers, but what they're not really saying out loud is that, and we're not going to hire if we don't need to.
No, I mean, think about it. If you're the CEO, like, you know, like, you're in the weeds, like, you know what's going down the pipeline. Like, you have that conversation with your CTO, the tech developers, software engineers, of what's going to be like next couple of years. So, wow, the 10-year yield is really going lower. It's 4.66 now. Yeah, it's finally recovering. So, okay, so this is an interesting setup now we're having in the market, where we had that I was very adamant, we're not going from a bull market to bear market this year. It's just a correction, a secular bull rally. And I think now that we're recovering, especially we didn't violate any key levels, and I think we're going to probably trend towards inauguration. What do you think's what do you think is going to be more of a weight in the headlines in the next couple of weeks? Is it going to be whatever Trump's going to do the first 100 days, inauguration, or is it going to be earnings season? Because earnings season is beginning next 2 weeks.
Yeah, I think the market actually has the ability to digest more than one thing at a time. But I also think that people sort of started immediately pricing in the Trump pivot when he was elected. And you saw that sort of initial bull run, and then you sort of saw some reactions. And, you know, when I say two things at one time, I don't mean all at once, because you see these instantaneous reactions like we're getting right now. But what I'm saying is I do think cooler heads prevail. I can't tell you how many times we've seen these sort of massive, strong sell-offs at the open, and then we closed it either like barely down or, you know, even some sides of the market even would recover. And I think what was ending up happening is it's kind of like cooler heads prevail. And the second thing is, you guys know this even better than I do, but like what we see in the sort of trading in the 24-hour markets can really kind of create sentiment shifts, because you can really move numbers. Like you're like, oh my God, this one's up or down 20% in the pre-market. And then it opens up to the wider, you know, trading public, and it's like 5%. So you kind of see these super big swings based on emotional reactions to these numbers. And then I think the market sort of cooler heads, and then, you know, the hedgies and the algorithms get a hold of things. They start to figure out this is now a buy, this is now a sell. But look, I mean, to really quickly answer your question, I'm still leaning on earnings. I think the Trump pivot's been sort of baked in. I think the earnings are going to be the great indicator if what we're hearing is real, like what we're hearing today. Like inflation's better, the market's more stable, the pivot continues. If earnings are shrinking or getting smaller or not hitting the expectation, I think that could create a near-term bearish sentiment. But to your point, I don't think it's a full bear market, even if earnings aren't great.
Yeah, I'm in a similar boat, because, like, I mean, we saw that reaction with Trump already, right? And it's not to say we can't see something else when things actually do kick off, but in my opinion, I think we saw the meat of it, at least in that fraction of a time. It happened so fast, right? I think even if we do get a move, it's going to be something that happens over a longer period of time now. And yeah, I'm with you. I think earnings are really what we need to focus on going into the next, 2-3 weeks. So,
I mean, going off of earnings, like last earnings cycle, in my opinion, I could be wrong on this, but I think we officially got the baton being transferred from stage 1 to stage 2 of AI to software applications. And the characteristic of the new stage of AI is something that stage 1 didn't have, which is permanence. Like, this is where you see permanence in AI, where there's no cyclical risk associated. This is where like the real alpha, like major moves can be made. Do you think? But the tricky thing is, I also think big tech is not kind of where you want to be in the next 6 months. Like, I think it's going to be a weird time where expectations have been significant. Like last earnings cycle, it wasn't the best besides Google. Google did great. Amazon did great. Everyone else, like, it was like meh, in my opinion, because expectations are so high. Do you think there's a world where big tech has a meh earnings, but software or the mid-cap growth can still catch a bid and buck the trend when the indices aren't moving as much?
Yeah, I've seen some really bullish outlooks for small cap, and I'm personally, like I said, I as a tech industry side, analyst research, and we work with 600 tech companies. So I have a lot of NDAs. I can't necessarily trade the names I'm NDA with, but I track all these companies really closely. I'm in on a lot of small caps because I'm still really bullish on a lot of these companies have never fully recovered from 2022. They, a lot of them never even got back to where they were, and now they're producing way more earnings. I'll talk my book for a second. I think I told you guys backstage, like I've been long SoFi for a long time, and look, you look at their member growth, you look at their revenue growth. They've gone to EBITDA, positive EBITDA on a not just an adjusted basis. I mean, and they're not trading even close to what they traded to in 21, 22, and it was all bubbly. So, I think there's a lot of upside for these these really exciting, and you track this a lot, Shay, because I read a lot of your tweets where you're sort of running down the Transmedics and these companies, these rocket labs that you really like. I like profitable small caps, though. I will say, I get a little anxious about companies that don't make money and they're small because they're constantly doing shelves and they're constantly, doing new rounds. I mean, I'm in on Genius Sports. That's one of the ones I'm in on. And today they announced another
Genius Sports.
Another $8.50 thing. So the offering, so that the stock drops 80 cents overnight, and because they're raising more money. But the big tech thing is it's actually become a flight to safety, and you can see it in the concentration numbers. I talk about this all the time. What did I see yesterday? That the top 5 names in the S&P 500 are actually on a market cap basis as big as the bottom 407 of the S&P. So what we effectively now have is the S&P 5. And so, I think the people have really treated the big tech companies in many ways as the safety play. I mean, look at Apple. It was just ripping and ripping and ripping. And now they've had a little bit of a recent adjustment, but on what? Apple Intelligence sucks. It's not a good product at all. The install base of Apple is pretty fixed. The super cycle has not happened. Nobody's really running to this next iPhone because of the AI on the device. They've got a captive audience. They've got a huge revenue stream from the 30% App Store thing. They probably have a pretty big antitrust risk, but maybe not in the Trump administration. But then you just go down the line. These companies are safe. They are big, safe tech companies that really can't be disrupted. And this will come true. You'll see it with Google, because Google will end up winning the generative AI battle, even though it didn't look that way with the early OpenAI play.
No, I mean, I'm so happy you're saying that, because I've been the perma Apple bear on this show for weeks, because I just don't understand why their PEG ratio is about 3.0 when the big driver was Apple Intelligence, and that was an absolute dud. Following their AR and VR dud, they're proving that innovation isn't their wheelhouse anymore. It's more of a financial engineering firm that just buybacks, that just has a lot of cash position, and just is a sticky ecosystem. But I would be a little worried about what Zuck's doing if I was Apple, especially what they're trying to get into AR and VR and kind of get around that App Store type of stickiness.
Dude,
I'd be a little cautious.
Zuck's.
No, but
y'all listen to Rogan? You listened to the Rogan episode with Zuck?
No, I didn't. I should though. I heard it was
good
great.
though. Yeah, I gotta watch.
Yeah, I actually tuned in. It was really good. I mean, it does go, in my opinion, to the sort of how chameleon-like these CEOs all are. We heard for 4 years that, Trump was the Antichrist and all this stuff. And it's now they're all going to Mar-a-Lago and they're donating money. And I think in the truth, I mean, this isn't a political pod, but I won't go there unless you guys really wanted to. But I would say that the spectrum of it all is these folks are in the business of returning value to shareholders. And they kind of blow at the wind. When the wind says, look, the climate's going to be less focused on DEI initiatives, less focused on sustainability. We're going to be focused, AI is diametrically opposed to sustainability. It is. Now, we'll solve for that over time, but we're all in on growth again. We're all in on bringing, jobs here. We're all in on basically leading the world in AI and innovation and technology. And these CEOs are all running down to talk and to basically kiss the ring. So it's super fascinating to watch this. It's another massive pivot, but it's super bullish to me.
I agree. I think it's volatile, but I think it's bullish as well, and I think that's going to make for a really fun market this year.
We're about to head to Daily Rip to talk about that stuff, but before we do, I do want to pick your brain, because you are you talk to CEOs, the goats of the industry. I think Google's product is incredible, but I think in this day and age, like you mentioned, you kind of have to. The CEOs need to be a showman. They have to be able to sell, be that salesperson. I'm worried that that's not the Google way. It's never been the management style of being that showmanship to sell that vision. What's your, you've had the conversation behind closed doors. What is your take on that?
So the reason I think Google ends up winning out is I just don't think the behavior change has been that meaningful yet. So people still search on Google. Yes, some of the younger folks, this is where Google's going to have to battle, is to keep them on the platform. But now that you're seeing Gemini inside of search, people are going to be like, well, why do I need to spend $80 a month on OpenAI when most of my search and integration and generative outcomes, and then you can connect it all to productivity and apps. I put Google and Microsoft both in an advantageous position. I actually think Sam Altman's in a tough position. Sam's a little bit of a showman, but I also don't think he's super likable. I mean, I think the showman, Elon, the showman is Jensen. Mark is becoming a showman. They say maybe it's the jujitsu, but I think he also just realized that he could, become himself. I mean, I think Elon sort of proved to the world that you can just be yourself, and you will have, if 60% love you and 40% hate you. I think the thing with a Google, this is what I would say. I'd say it's a little bit too, I'd use the word maybe antiseptic. It's like, it's so safe. We're not going to play any side. We're not going to have a strong opinion about things that people have strong opinions about. And I think when you're a company that big, that is sometimes the line you have to walk. But when you have the Jensens, Elons, and now Marks and others that are willing to come out, even Jeff Bezos, sort of now that he's kind of in this chairman role, you're starting to see this real human. And it's like, I either like him and I'm going to go all in, or it's like I don't, but I think it's more positive than negative, and it's been good for those companies.
Yeah, he lets the product speak for itself, and I do think Google was violently mispriced a couple months ago. Now they're finally returning towards what they deserve, and it's up to them to see the next leg in agentic AI if they can capitalize for that next earnings expansion opportunity.
There's that heat map from yesterday. Yeah, financials looking really good. Not too much red, but the red you do see has been in the big tech names that we've been trading pretty frequently, right? So obviously
not anymore though.
Not anymore. That's what I was going to say. Everything's bouncing back this morning, so we'll see if this move holds. I think it's really important that this move holds up. I think we've seen that a lot in the past, where everything looks really great in pre-market, and then by the end of the day, we're all just like, "What happened, man?" So want to see this momentum continue for sure.
Again, I do think we're safe from that. I'm looking at the 10-year yield. It's going lower and lower. I think this rally is absolutely real, and I think some key honestly at the SPY, the way they respected the 580 level, it really did tell me it's not ready to test their 200-day moving average at 560. I do think this is one of those characteristics. Ever since October 2023, any dip we've gotten hit that key level, 21-week EMA, V-shaped recovery. Something occurred that was a catalytic-driven event that made it recover, test that previous high. The CPI print clearly was that catalyst, and now it's going to be up to the earnings to fuel the rest of the move. But let's see. Yeah, Quantum. Yes, let's see Kramer. Kramer is a very interesting character. He's been a lot. Have you noticed he's been very active the past year? Ever since the inverse Kramer ETF got created.
He wants to make sure everybody sees what he's talking about. I don't know what it is.
Yeah.
I saw
capitalizing.
I saw a post yesterday that Nancy Pelosi and the inverse Kramer outperformed the majority of hedge funds this last year. I thought that was funny. That's pretty awesome. But yeah, skepticism.
You don't think that's an accident, do you? I mean,
no, not at all. Yeah.
But yeah, skepticism from several big tech CEOs. Mainly Nvidia's Jensen Huang and Meta's Mark Zuckerberg caused a quantum computing stock bloodbath last week. The industry bounced back today, bringing out a bold call from one of retail's favorite market prognosticators. Jim Cramer took to X this afternoon to share his view that today's rebound, which saw names like Rigetti Computing soar nearly 50%, is another exit point for anyone who may have overstayed their welcome in the space. Shay, what do you think about that? You've been talking a lot about quantum.
I mean, I've been very vocal.
You think he's right?
No, he was misquoted. Jensen was misquoted. I think the general application for quantum is decades away for consumers. I'm not going to have a quantum computer for at least 20 years. I think that's what he was referencing. He wasn't referencing the real world applications being used by quantum. That's already occurring right now. You're seeing with IonQ via Azure, AWS. You're seeing with IBM. Even Google Willow is more of an academic breakthrough, but that was something that was unimaginable just a year ago. I think that was misquoted, and I do think there was a lot of frothiness in the quantum bucket because that Google Willow news, the academic breakthrough, re-rated that whole industry because it's not decades away. It might be 5 years away, and because of that, there isn't that many pure play quantum names in the market. I think all the names combined is $20 billion in market cap when this is a multi-trillion-dollar TAM. of course, next decade. So like I think that's why there's a lot of frothiness in those names because there's such a select few, and there's catching bids, and valuation doesn't really matter if you're early in the sector growth thing. But before we move on, I do want to pick Daniel's brain about quantum because he's also one of the big quantum bulls, and he has a lot of insight that I don't have visibility in at all. So I'm very curious on what has to say.
Yeah, so a little backstory. The chairman of my company, Niccolo De Masi, is actually a board member of IonQ. He took the company.
Oh, he took
public.
the SPAC.
So,
Yeah,
he took the SPAC public.
Yeah.
So I can't speak too much to that. I got to be a little bit cautious about some of it. But look, I've been working a long time with the Googles, Microsofts, Amazons, and IBMs on quantum. I mean, here's the really interesting bifurcation, guys, is that the big companies that have quantum as part of their platform have no value in the company's evaluation based on quantum. Like IBM, nobody's valuing IBM for its quantum contributions, even though it's built Qiskit, which is basically your CUDA for running software on a quantum computer. So you do kind of see that frothiness. It's like these pure quantum plays, you know? I mean, there was this company like QUBT, I think it was Qubit or whatever it was. It was like a beverage company.
Former energy drink.
Former energy drink. Now they're a $1.8 billion valuation. So you do see that and you're like, there's always these kind of red herrings of what's a bubble. Now, you know, I did mention IonQ, like some of what they're doing, like one of the big problems I think quantum can help solve in less than 15 years is going to be how AI workloads are done and use less power. Because we're not going to infinitely be able to create the power that these data centers need. So like the quantum plus classical combination can be really powerful. And we're seeing it in simulation. So all the Amazon brackets and the Microsoft simulations and the different opportunities to basically use classical computing to do quantum algorithms or quantum encryption. I think that's where it's at. The one thing I'll say, because I don't want to belabor this too much, I know you guys got to keep moving through this segment, but is quantum monetizable? Meaning, can you actually understand and create income? Like, I know you love rockets, Shay. And, you know, I think you and I, when I do go back and forth occasionally comment on yours, like, I love this category too. I just don't know how they make money. Like, you know, if you're an investor, like if you're a VC, you can wait 10 years for a 20, 50x opportunity. If you're the average investor, the people that are watching this show, you're like, I'm putting the money in and I'm chasing a bid. And if you're just chasing a bid and you can't figure out how they're going to get to positive EBITDA growth, revenue expansion, and market, you know, permanence and durability, I always worry about that because there's so many great companies that trade at low multiples, but that's also boring. So I realize like I'm going to get booed off the show for being boring. So quantum's there. I think Jensen was characterized correctly in many ways, but I also think quantum's a huge secular that people need to pay attention to.
I think the way the profitability you're going to see in quantum is going to mirror the playbook that Palantir did for AI. It's going to be through government first. I think you're going to see that quantum security, like quantum security, is going to go through the Air Force, like whatever all the government's departments. Like that's where we're going to see like the B2B, and that's when you start seeing that profitability from those large contracts. And I agree with what you're saying, Dana. Like it's decades away on actual application to see like how the ChatGPT moment of it, but like the defense is the easy one, and I think that's why
cryptography, Shay, like
exactly
the idea. But like even that, like I heard, I think it was Chamath or someone talk about like they're gonna bust Bitcoin. It's like I've talked to the deepest experts. Actually, I have one of my analysts, Dr. Bob Suter. He ran the quantum program for IBM. He's one of our analysts now. I mean, and I did some background with him, and we're talking about this. He basically like, Jensen's more right than wrong, meaning that like, you know, because all these smaller companies came to us and they're like, can you guys put a comment out that sort of, you know, debunks? And it's like, no, like we really can't come out and say he's wrong. What we can say is there are these like applications like cryptography that will be used to help create more security or break security where needed. That will really be a meaningful application. But like us coupling quantum computing immediately to accelerate AI agents, it's just not a thing yet. It's not a real.
It won't be for a while. Yeah. And I will say that the cryptography angle, what worries me is blockchain. Like I don't think blockchain has taken off like I thought it would. I think it's looking for a problem to solve. It doesn't really have one yet. That's what my worry on quantum is. Like, is there like, until the AI workloads get so drastic, and like we need to find an alternative solution because our world can't survive the way it's going. There might be a weird, awkward period of like what blockchain's going through. Like
I have a blockchain application, Shay. When politicians meet with companies or meet on companies, and then when they place trades, I'd love to see that all on the blockchain so that we can figure out how Nancy Pelosi beat every major hedge fund in the world.
Whoa. See, there's so
That's
many
some money
applications
move.
of it. I'm shocked that blockchain's not taking off.
She's such a good trader. I mean, she's amazing. You should get her on the show. You should bring her on.
That is awesome. Just taking a look at the financials, I'm sure Daniel, you could probably talk a little bit about this, but financials just looking good, but also trying to break that structure to the downside now, right? So we're making those higher lows, higher highs consistently in the market. Now you're seeing a bit of a market structure shift with making some lower lows and lower highs, right? So I'm curious on your thoughts kind of here. We got that 200-day SMA, which I think definitely could use a retest of after not seeing that for a while. But as you see, RSI not quite oversold, and RSI is bullish, it has the bullish divergence on it at the moment. So I was just curious on what you were thinking there.
Yeah, I woke up to some of the early earnings. You saw Wells, I think, beat on the bottom, missed on the top. That's a really boring company to me. JP
I know,
Morgan,
it's not much fun, but
yeah, JP Morgan did really, really well. And of course, Jamie Dimon came out and debunked Bitcoin again, or, came just completely crushed the spirits of all your sort of 80-year-olds and older that listen to everything he says about it. Him and you guys also need to get him and Michael Saylor on together, because that would be a great. But I also laugh because JP Morgan has all these sort of derivative exposures to Bitcoin. So they're like, yeah, we don't do it, but we kind of do it in these different ways. And but their numbers look really good. I thought Citi though. I mean, Citi absolutely blew it out and then announced
The buyback from Citi. Yeah,
$20 billion buyback. To me, that's kind of indicative that, I think there's a lot of confidence that they can set aside that type of capital for a buyback this quarter. I also, though, think that's indicative that they think some of the higher margin stuff's going to come back. Because what we haven't seen in a long time is like real growth of deal flow. I mean, IPOs have still been low volume. M&A activity has still been really tough. And I think we're going to enter a better macro. So while, I spend my time in tech more than the banks are the enabler of tech. So we've seen M&A go really slow. Big deals aren't happening. These banks make money when they take companies public. I mean, that's like real, the everyday banking stuff is sort of boring, but I'm just going to talk my book one more time. I mean, I just think everybody's going to SoFi. That's a joke. I'm joking, but but if you want, everybody should go to SoFi. I'm kidding, but yeah, these were good numbers, guys. Like, banks have really been super boring. This was boring but good, and I mean that's always a good indicator of a healthy economy.
Well,
absolutely.
I think so. Going off that topic as well, where I get a lot of deal flow in the private market. I love investing in private companies. It's surprising how many of them aren't going in 2025 publicly. They're looking 2026 and beyond. Like, there's a pause for some reason. So like that's something that's interesting to me. I don't know if Daniel, you're seeing that on your end as well, but I think for those banks, the iBanking departments, I think M&A is going to take off this year. That working capital that's been sitting on the sidelines for a lot of these bigger companies, getting that 5.5% interest rates. That's going lower and lower, and they're going to use that capital to buy these undervalued assets. It's been sitting there because their industries are vulnerable to high interest rate environments. They want to take advantage of that fire sale. So I think banks are interesting on like the high margin business because M&A is going to take off this year.
Yeah, I have 2 or 3 different ways that I'm exposed to this. I can give you some anecdotal, but first and foremost is big tech M&A activity, right? And the number of conversations I'm having with corp dev and strategy teams recently versus in the past about, getting that question, where should we be looking? Which company should we be looking at buying? Or here's where we're thinking, help me, figure out the right companies to be paying attention to. So I do think that's definitely out there. PE activity, just seeing private equity firms in the game. And by the way, even as a really fast growing company ourselves, I am probably getting 2 to 3 a week now, private equity companies that are coming after me to try to, to actually invest. And that's always been indicative. It's kind of gone in cycles. And then, of course, the IPO market, like you said, I mean, the IPO market would be your third way. But I'll give you another anecdote about, I told you about Niccolo, because he did 4 SPACs when he was, doing that. And Genius Sports was one of them. IonQ was one of them. But he actually told me that, that one of the things is for small caps. there was a period of time where just growth at all costs could drive a stock price up. But right now, over the last 2 to 3 years, the environment's been so bad that if you're coming out and you can't basically guarantee 8 quarters of earnings growth, revenue growth, and basically beat raise, it was a terrible time to be public. It was a terrible time to be in the public market. So the question is, and I think you guys on the show, I mean, you're a very bullish sort of lean here, is that, can we see this kind of continuous growth that can get investors excited, even if there are some bumps in the road? Because the smaller companies going public, I mean, there are bumps in the road, but like company like Reddit, guys, I mean, like I thought Reddit was going to be trash, and they've actually done I'll admit it. Like I came out, I called this one, I went on like Fox Business, CNBC. I'm like, I don't get it. I don't know how they're going to make money. I don't know how they're going to grow.
There's that bell. Market's open.
I absolutely am eating crow, guys, on that one. So
No, I mean, I follow that sentiment because like I used to work in corporate strategy for Lionsgate, so like I was in charge of like the IPing movies, like launching, etc. We use Reddit to get the best, highest quality of data of the sentiment of what a trailer did, what a movie's going to do. So I was like, I can't believe I didn't connect the dots that in this LLM race, quality of data matters way more than anything else to feed into your LLMs. Reddit's that tier 1 data play, and I didn't connect the dots for my anecdotal evidence, and now I think we're seeing how that is the case, and they're capitalizing on via ads as well, because the LLM race, nobody's caring about efficiency on spend. They want to get the highest quality. It doesn't matter what it is, and they're going after it. So Reddit's a great play right now. Curious what they're going to do in like 4 or 5 years when LLMs are going to be a race to the bottom, and see what their next phase is. But yeah. So SPY looks like it's holding up right now. That's nice to see.
Just taking a look at this, wondering if there's a shakeout in progress. Bonds are up, dollar down. Obviously, we're seeing yields pull back this morning and the market back up. I haven't taken a look at the dollar this morning, but
no, it's going well. It's doing really well right now. Yeah, I think this has legs. I don't know. I hate
Shai's making moves.
I can't stream and trade at the same time, and I don't like getting into a trade in the Qs at 1.5% already. It's just like, where's the R&R, especially today? Like, can it get to 2%? Maybe, but I don't know. The rug pulls we've seen, like my thesis might be accurate. It's all the strong dollar and 10-year yield. That's the only metric to really matter. But if I'm wrong and there's some profit taking ahead of earnings season, who knows? But
gotta watch out. Getting a little bit of a wedge break there, and structure's looking a little rough into that 109.
What's surprising is Nvidia. Nvidia's feeding right now, right at the open. So that's something that's interesting because they're sitting at their 21 EMA, weekly EMA, and that's a key level. Like I said, it's fading. So it's watching that. But Rigetti, let's talk Rigetti. Continue talking quantum because Rigetti is up. What are they up to right now? They're up 22%.
So it's 21%. 21%.
Yeah.
What EMA is that? That's a 50 moving average, I think, that we're retesting right there on that chart. Does that have any significance to either of you? I don't really use moving averages that much anymore, but
so I don't know. In these like high moving stocks, like moving averages don't mean much to me because I just think at one point, look at that. At one point, look how much percentage it was above their 21-week EMA. That's wild. That just shows frothiness. Like, it's interesting it bounced from at that 21-week EMA level. But Rigetti's interesting to me because I'm a pure IonQ bull, as you guys are both aware, and many people are aware. However, because I love their trapped ion technology, I think that's the most scalable and precise approach to quantum computing, and that's why IonQ is like my favorite. But Rigetti's a really interesting play. I just don't see how they can compete with the IBM and Googles of the world. But do you have any take, Daniel, on Rigetti?
I don't. My biggest take here is that be cautious. To me, they're still chasing the bid in this particular area here. Look at the fundamentals, the financials. Where does the growth come from? I love when. By the way, like I said, I think IonQ is the best of the pure plays right now for sure, and I think the market's indicated that with the way it trades and the investment in it. But I think you do have to people are like, oh my God, they won a $21 million deal to, do some big government thing. It's like $21 million. I mean, that's like how much that, fell out of, your average congressman's pockets this week, when they were rolled over. I mean, these are not big things. I think you said something about being academic. I think this is super academic right now. But having said that, like, there is going to be this breakthrough, and if you're on the wrong side of it, it will be hard to catch. Like you said, it's hard to catch the falling knife. It's sometimes also hard to catch the ascent correctly too.
That's the most difficult part, I think, because first off, I think people referencing quantum as like a 3D printing thematic is so offsides and wrong. I think that's like a lot of people are saying like, oh, it's just like 3D printing. It took off. It's supposed to be applicable across many industries, going through a secular shift. Quantum computing is similar to that. I'm like, no, it's not. I think it's a derivative of AI more than like a brand new thematic. But wow, Nvidia's continuing their sell-off. This is so interesting.
This is interesting from StockTwits, the top retail picks for 2025. I love seeing Tesla on there because that's definitely one of my top picks for 2025, as well as Coinbase. But I don't see that on the chart. So, but we got Palantir for number 2, which we've talked a lot about. Shay has a good take on that. Nvidia number 3. Love to see that. Although I personally, I don't know about you, Daniel. I think obviously I'm still bullish on Nvidia. I hold it long term. Love Nvidia. But I'm also not like gonna be like adding heavily right into this new year. I think it's gonna be a lot quieter over year. I'm just curious if you could give some color on like on.
Well, I absolutely love.
year.
I loved the keynote and at CES, and I think so many people missed the point. I heard a lot of people, oh, it was boring, it was long.
You think that's why we saw that sell-off the next day?
I mean, I just don't think people could actually understand that they just witnessed a generative AI stack for physical AI being launched. Now, horizons matter. So like you have to understand that like right now, NVIDIA actually trades at a really reasonable multiple. You know, it trades at a really reasonable forward multiple based upon the expected earnings. They have 90, we have them forecasted about 92%, maybe even a little bit more of the GPU market and growing. You know, we'll talk maybe AMD at some point in this. If AMD can't figure out software, they're going to actually cede the entire GPU market to NVIDIA. And, you know, that's the sort of hotly debated word on the street is that customers are going with MI, but they're not able to get where they need to get with the software. And that's just all roads lead back to NVIDIA. So I really do like it kind of in the, I like it in the long term because it has 2 more $1 trillion markets to address that it really isn't getting much credit for. I think it trades entirely on its data center forward look. It's not trading on its automotive. And, you know, Qualcomm's kind of ate its lunch in automotive over the last couple of years, but part of the keynote's purpose was for them to sort of reintroduce the fact that they're going to take automotive seriously again, and they're going to go after it again in a big way. But this physical robotics stack, guys, this is incredible. I mean, the work that it takes to train a humanoid robot to be meaningfully participative in the real world, there's nothing else out there that can do this. There's nothing even close right now.
It's the greatest TAM in human.
It is so exciting.
It really is
so exciting, and like I just. If I'm looking at this, like you know how people bought Apple in like the 1980s and they're all like descent to millionaires now. They had like 10,000 shares of Apple and it's split. Like I could see NVIDIA, like if you're a 20, 30-year holder, being like the ultimate wealth creator for people like teachers and stuff that become like multimillionaires later in life because they bought 1,000 shares of NVIDIA when they were like 22 years old. It's going to be that kind of stuff.
Well, I can't wait until like there's some exciting private market companies that are capitalizing on the robotics theme. I cannot wait until they go public because I'm still looking for that pure play robotics name out there. Like you get that exposure with NVIDIA, like you mentioned, where their Omniverse platform allows you to design and test robots in their virtual environment. That's huge. You have Tesla with the humanoid. You have Amazon with the logistics robotics. But like there's still so much noise in those companies that's not just pure robotics. I can't wait until some of these private companies go public because I'm so bullish on physical AI. And it's going to be a generational changing like move on certain names that are in private markets that it's going to be, if you thought AI, there was some FOMO behavior in AI or quantum, just wait until robotics gets
so Shay and Jordan, I will actually say if you want the ultimate robotics play with less risk, it's still super volatile, but it's less risk. And you'll laugh. I think Jordan will laugh when I say this, but I think it's Tesla. And here's why. You have a company that has a stable revenue stream, growing production. It makes some money. It's traded like a super high growth company. It's a car company with autonomy, AI, and robot. What I guess I'm saying is like it's getting valued that way, but it actually has the capital and stability of a normal company. Because like I like companies that have cash flow. Like cash flow is good. And so,
Absolutely.
but there's no company that kind of has that frothiness, but like Tesla has the capital now, it has the data. So if you talk about FSD as one version of robotics and autonomy, right? I guess you could kind of argue that they split, but in my opinion, FSD or autonomous vehicles is sort of is full robotics on the pathway, meaning you have a defined pathway like roads, right? And then you have sort of the completely unstructured. So you go to almost parallel. I know you love to do the data stuff, like structured and unstructured. So FSD is the structured data AI robotics platform, and humanoids is the unstructured platform where it's like hills and sidewalks and doors and buildings and staircases. But like Tesla's going to capitalize on it all, and it has the cash and it has the data and the data that's needed, especially for that on the road. But I really love that play there because of the stability. It is a little volatile at times, though, and that's Musk, though. I mean,
Yeah.
I was gonna say
More times than not, yeah.
Yeah.
his timelines suck. I'm gonna say like his timelines suck because we're supposed to, it was like 17. We were supposed to have the car go across country, 18, 17, 18.
Yeah.
I mean, but I do
Definitely
think
not too good there.
I think that data set's amazing, and I just think the loyalty he's built, and he's super polarizing now.
Well,
But
can I ask you what's your thoughts on the disruption towards Uber? I think Uber's huge narrative headwind is like it's going to disrupt because in this post AI world, owning IP or having a sticky moats is an absolute necessity. Like you have to own the proprietary technology. Partnerships aren't good enough anymore because there's going to be tons of disruption. So like Uber has an incredible network right now, but they failed to acquire any kind of proprietary tech or IP for this future autonomy world that we're going to be in. So I'm like, oof, they can maybe partner up with all the second, third tiers of autonomy. But I don't know. I feel like Tesla, the way they go about it is take everything at all costs. Like there's no second, third fiddle. So like, what's your take on Uber's disruption potentially from Tesla's CyberCab network vision?
let me tell you what I think the tie-up should be: Waymo and Uber tie up and figure out a way to attack that market, because Waymo has a really good autonomy product, like really, really good. Waymo's really good. Having said that, they just don't have the network. They don't have the scale right now in any capacity. Look, I think, by the way, if Musk wanted just game over, he'd just buy Uber. I know it's crazy, but like literally like game over. You now have the drivers, the cars, the roads, the maps, the community.
And the time to do that is the next 4 years, so that acquisition would not get blocked.
I would say that
So,
the particular market sentiment right now, but it's also about solving a problem. I mean, realistically, we're trying to get safer. We're trying to get less congestion. We're trying to, basically move the world forward with autonomy. So I don't know. By the way, guys, I'm like a car guy, so I love internal combustion engines. I'm not super huge on electric, so like.
Oh, let me tell you, I am as well, but I still bought a Tesla, and I was very, very on the edge about it, and very happy with the
I
decision.
just
But
like
I need a petrol engine. I'm with you. I need an engine.
I just wonder like about the human, and like I said, I mean, I have kids, early 20s, late teens, and I have a son that's a little bit younger, and I do wonder because there's like this very, especially Americans, like this very strong relationship between us and our vehicles, and so
romantic,
like,
yeah.
it's a bit of a romance, you could call it, but like, are we willing to part ways? I have to say though, like the efficiencies of every bit of your time in mobility, being efficient and productive, being able to be in a vehicle, getting your work done, keep crushing it as you're on the move. That's pretty darn cool. But I also like to go fast, so I got a little Ricky Bobby in me.
I love it. Really good stuff. But yeah, great list from StockTwits there, under the radar.
Oh, wait, SoFi was on there.
Yeah, SoFi was on there. Love to see that. Rocket Lab as well. Shay, you've talked about that plenty. We've talked about ASTS as well. So plenty of great names on there.
It's crazy. 2 space names are in the top 10 on that list.
Yeah.
But, what's that number 7? I've never even heard of number 7.
AVXL. I haven't either. NFX Life Sciences. I've never.
It's got to be some pharma trade. I was. I don't know if you guys remember Chemocentrics. At all. It was bought out by Amgen, and it was one of the most wild, volatile runs up and down. But like the StockTwits community around pharma stocks, bio and pharma, is so interesting. Like, because that's the kind of stuff I really make these really risky trades around. And so I think there's always one or two rolling on the platform. Like I remember Cassava Sciences and like these, like I'm saying that
There's
are like
always one
always
that's got something going on with it. People are trying to squeeze a move out of it.
buyout coming,
Yeah.
whatever. It does happen. I mean, I rode that thing
does.
all the way up after it got approval. It went down 80% or 70% after approval. I thought it was dead money, and then I woke up one morning and Amgen bought it for $52, and I'd had amassed this huge position that I thought I got crushed on, and ended up like 330% in a day. It's like that's the fun of those kinds of trades. But you have to have like, I don't know, but you got to really have like an appetite for that kind of stuff. But there's always one or two going on StockTwits. It's a lot of fun to watch.
Definitely. Under the radar for 2025, we see Lunar again on here. Lunar moving mankind further into space exploration and commercialization. With Trump and Elon at the wheel starting 2025, space is going to be a big untapped market. Easy long from 5K DGen. DGen, love the name. It's great. Yeah, interesting stuff. I don't know. What's your take on space, Shy? I haven't really done enough work into that really to make a decision, to be honest. But I know if Elon's anywhere near it, it's probably positive.
I mean what Daniel alluded to earlier, like I am very big on Rocket Lab. I got in it was stagnating for years, the stock under $5. Nobody wanted it, but as soon as it crossed $10, the narrative changed. Narrative follows price action. But I do think when the Fed cut rates in September, I think that initiated a risk on environment, and the eyeballs were going to go on what's the next frontier after AI. It's quantum and space. So I thought like the best pure plays in those thematics would catch major bids, and it was IonQ for quantum and Rocket Lab for space. So now that they got re-rated and they 5-6x, it's a different story now on getting in at these valuations, because we're so early on both of these thematics that it's going to be some dilution along the way. Like that's why Daniel likes to invest in profitable small caps. He doesn't have to worry about that headache. You do have to worry about that headache for Rocket Lab and IonQ, but the way that Rocket Lab's building that space, their moat within the space economy, is creating this end-to-end logistics network that's creating a high barrier of entry for competitors to try to get into their pricing power. And I think SpaceX, what they're doing is creating a high tide raises all boats situation for a lot of these small space names, where they don't really have to require as much capex to get all the flow going into this economy, because SpaceX is doing it for them, and now they can just worry about the product. So Lunar specifically, like my issue with them is it's all NASA. NASA's just flowing deals their way. If that stops, that lever stops, like I don't know. Rocket Lab has so many customers, small, middle launches, or have a space systems revenue now. It's more than 60% of their revenue, and that's like where is essentially like, whoa, that's like the App Store kind of thing, where it's just really high margin business for them. But it's at this juncture, I don't know. Space is like let's just say the revolution we're experiencing in tech is a baseball game. AI is in the third inning. It's going through the first batting order. Quantum computing is stretching before they go to batting practice, and space economy is probably pitching the ball for batting practice. Like it's just like it's very, very early, and there's going to be a long runway, but I think there's gonna be pullbacks along the way. Like, and just embrace that volatility. That's the toll you have to pay on being early on any revolution. But what's your take on Dana on space?
You know what I like about
Planet Labs is one of Nicolo's companies, I think.
Yeah. You know what? And there's a pragmatism to some of these, and there's less practicality to others. So like what I like about Musk is, like with SpaceX, he's got Starlink, and I mean that's a really practical, applicable, recurring revenue business for the company. I mean, I don't know if you guys, but the first time I went down from an internet for a minute, I got my Starlink, and it's like, this is amazing. And you get the portable one, you get the on the ground one, and I mean, you're talking like $600 a month per person to have this kind of ability to know you're between the mobile and on-prem, that you're connected all the time. So while he's busy shooting rockets into space and kind of exploring the idea of taking people to Mars, he's also figured out how to make money in the near term and created a massive valuation. I also love how his whole little ecosystem, XAI, SpaceX, Boring, like all these things have threading that connect to one another, that these businesses create value for each other. So I really do love that. I mean, look, I think it's an ambitious area. We've done more to get to space in like a year. Like, I don't know about you guys, but I'm really having my doubts about whether we've made it to the moon or not. I'm not like some weirdo conspiracy guy, but it's like, you're telling me we could broadcast that where we can't even get the live stream of the Paul Tyson fight to everybody 50 years later with all
There's
the
definitely questions that arise like that
So,
in my
like,
mind, you know? I'm like,
I mean, so my take on it is like, this is one of those areas, same with quantum. I mean, if you're like an investor, you should be like, we want this to succeed. It's kind of like we want Intel Foundry to succeed. We need to be able to manufacture more chips. The fact though is like when you're investing, and this is, you mentioned being like private investing, public investing, like everybody's got to understand horizon. Everybody's got to understand like kind of their time requirements, what they're trying to look for in a return. The only thing and again, one of my second biggest position besides SoFi is DraftKings. And it's because I think most people are degenerates. I think most of the market are degenerates gambling. So I guess when we're sitting here having this conversation about this, like there is a real play to make a lot of money on space over 2 decades. I believe that. But I think if you're trying to chase the bid right now, it's all just a kind of a momentum trade. It's a gambling play. It's maybe not even as good as a gambling play because at least I kind of know who's on the 49ers or the Rams or whatever. Heck of a lot better than I understand these CEOs of companies that I have no access to. So like, it's a lot of play, but this stuff is exciting and societally and speaking as humans, we should want these things to do well. We should really be excited about it.
Absolutely.
You brought up Intel. We didn't talk about Intel much on this. I do want to talk about that a little because I have a corporate strategy background and I always like to play what if scenarios if I was like working for this company. Intel, like what would my recommendation be if I was working in that boardroom communicating to the C-suite? I think, like you said, Foundry is their not just low-hanging fruit, it is their moats. I would suggest go all in on that. Hit the CapEx requirement initially, but like become the pure Foundry play and divest everything else if you can. I know it's very tricky, but if you can, just divest everything else and become this pure play Foundry. What's your take on that, and what would you do if they wanted to hire you as a new CEO? Because I forgot, like, did they hire a new one? If not, maybe Daniel might be the new CEO.
Don't call me, guys. Don't call me. No, I work with Intel. Actually, I met with MJ Holdhouse, who's their new interim co-CEO of Intel, and then she's the CEO of Intel Products now. And I had a really good and long-term relationship with Pat Gelsinger. So I've been through this whole recent saga, had many, many conversations. Got to meet with Lip-Bu Tan at an SIA event. If you remember, Lip-Bu was the guy that left the board and the start of this sort of demise. So I've had some good access to this situation. Look, I 6 months ago was saying, while Pat Gelsinger could not be less popular with Wall Street and with investors, that he was actually turning around a company that really needed to be turned around. And again, you cannot even understand the damage that was done from his predecessors. The thing was in an absolute mess. They'd gotten into all kinds of things, drones and sensing, and they completely got away from products. And, his big bet was that, we would need Foundry. And if you kind of think about like what was going on with the CHIPS Act, you would think the U.S. investing the $53 billion and then the whole rest of the innovation and science was really going to get behind U.S.-based manufacturing of chips. Fact is that most of the fabless don't want to work with Intel. I mean, that's the real ground truth is they're very happy with TSMC. They're very happy to manufacture their chips in Taiwan, and they're very happy to work with a company that they don't have any conflict of interest with. And so that's why we've only seen Intel Foundry get these kind of odd wins from like the hyperscalers for a specialty networking accelerator part, not for, like a big wafer deal, right?
Yeah.
So here's what I actually think. And I did meet with, like I said, their new co-CEO, but this was all my own opinion. I think Intel is going to probably split. Yesterday, they split off capital. They actually split off their venture arm. I think the Foundry, they've already set governance structure to split and run it like two companies. I ultimately think that Pat's exit was the beginning of the final transition to a full split off of Foundry. It needs too much time, too much capital, and the trust required to get high volume wafer deals with the likes of Nvidia, Qualcomm. And by the way, this isn't what I wanted because I thought one big strong Intel would be great for the world. No. But if the sacrifice is a split to get a really strong US based leading edge foundry, and 18A is encouraging, their newest node is encouraging. Products, though, the Intel products is a really profitable business, and split off on its own, it would make a lot of money. This is a company that everyone says is like the end of the world. They still have like 70% of client of PCs.
Yeah.
They have over 70% of data center CPUs. And again, we can argue that era is ending. I'm not going to fight that. Here's the thing. They need to go all in on a GPU. They need to go all in on the right kind. They're not a high performance computing. They need to go on a lower accuracy data center GPU to compete. And it doesn't have to be a Blackwell. If they could come out with something that's A100, H100, high volume, reasonably priced with decent software, there's going to be a market for that. And so I think that Products is going to focus on getting those two things right. New client, new PCs, AI PCs, and getting a data center part right. I think Foundry, if it doesn't split, it's going to be heavily bifurcated in terms of how it's run. And I think if they can get those things right, it's a focus play, and then they need to go all in on Foundry. The US needs a second strong Foundry. We cannot, even if TSMC builds more 2 nanometer and 4 nanometer here, we still can't depend on it. Too much macro and geopolitical risk with Taiwan. So we want to get there. But right now, the trust needs to be created. And of course, they just need to prove that these processes are good and that you can port the PDKs, the designs between TSMC and Intel, so that if nothing else, Intel can win the overflow. And I mean, start winning wafer deals, not just specialty packaging deals.
Yeah.
No, I think it's like you nailed it. I think it's totally different industries, but I do think like what Sentinel-1 and CrowdStrike, that narrative issue that Sentinel-1 has always, is it's a CrowdStrike issue. It's not a product issue on their end. Intel has this, their product is really disappointing on the Foundry, but like I'm saying, TSM is just so up there that they have a TSM problem. And I think this week Taiwan, the government itself said like they opened the doors a bit more than they used to on like them developing more facilities in the Western Hemisphere. I think Intel needs to do something quick because that could be the final nail in the coffin.
Intel is the second largest customer, I think now. It's second or third of TSMC. And so their super good new PC part, Lunar Lake, the one that you're hearing about, is actually TSMC. And so that just goes to say that like Intel products can work really well with the right, like, so this is where like they've got to be able to be customer zero. Like they have to have their newest parts built in the Intel foundries and they have to perform really, really well. And if they can prove that and create that sort of church and state, I think that there is going to be demand. I think the Qualcomms, AMDs, I mean, Nvidia and Apple are so close to TSMC. I just don't know if that would ever happen. But I think they could win because, TSMC's inelasticity of their pricing is unbelievable. Like they can just keep charging more and charging more and charging more. And like, I mean, that is like, I think you and I have kicked that stock around on Twitter a bit or on X a bit. But like, God, how do you not own that? Like, I mean, again, I can't, but like, how do you not own that? When you look at the structure of that company, it's basically a monopoly. It can't be really regulated here. And we need it more than they could ever slow it down. So they can just keep raising prices and people are just going to keep spending. It's reliable and the demand is through the roof.
Yeah, 100%. That's the thing.
Them and ASML, the two biggest moats in semiconductors.
Oh my God, I love ASML. So the difference between me on that is, I don't know, you have much more of a closer connection, but like I just do not have any belief in the board. At Intel, I just don't like. They've just like fumbled the ball too many times that I just need something to see like any kind of pivot or maybe a restructure of that board because like they just don't have the finger on their pulse at all. ASML, like I love what they're doing. They have a moat. They're just going through some wonky. I think the whole industry is just getting creative on going around their machines on stacking the chips rather than just like paying up. And I think that's a band-aid, not a long-term solution. And their China exposure is like killing them the last 2 years. But yeah, the monopolies in stage one of AI, like it's clear. It's ASML, TSM, Nvidia. The rest are great plays. They just don't have the scalability as those three players, in my opinion. But yeah, we're at time now, and I can't believe how quickly this came. It was a very fast hour. I think it's because Daniel, like this, you're speaking my love language. A lot of the stuff you were saying is like, oh my God, it got me excited. Like,
yeah, love having you on, Daniel.
It's exciting, yeah. So thank you for being on. And where can our listeners find you? Because you do have one of the best alphas out there that I read all the time because it makes me think and do more research on my end. So like, where can people find you?
Yeah, thanks so much, and love to come back, sometime, guys, if we can work that out. So, I'm the CEO of Futurum Group, so futurumgroup.com. That's the company. We have a huge team of analysts that are tracking all the big tech adjacencies. I have my Twitter, Daniel Newman, just like my name with UV at the end. I'll tell that story maybe next time of why the UV is there. If you follow me there, like I said, I follow about 10 accounts closely, Shy, and you're one of them. So I really appreciate the work you do. And I don't have time, but I've noticed that as someone that doesn't have as much time to kind of create content there, that replying in great streams of conversations like yours is actually a great way for people to kind of see what we're doing. I have a column on Forbes, Market Watch. I'm on CNBC, Bloomberg, and Fox Business all the time. But I love this kind of format. I got to say, like, going on for 3 minutes. You did it the other week. I saw you. You looked great, way better than you look today. That format's great, but you don't get like here. It's so fun to really be able to dig in and break down. And then of course the 6-5 podcast. So if you check out 6-5 podcast, me and my bestie Patrick Moorhead, two semiconductor and tech geeks, we rap all day long. And check my feed and follow me next week. I'll be in Davos, hanging out with the globalists, seeing if there's still any relevance to being at WEF. In the era of Donald Trump. Who knows? I mean, maybe not.
That's awesome. That's awesome. Well, thank you for hopping on. The market's roaring. 10-year yields going lower. This is exactly what you want to see. Yeah.
We just got a new 4-hour candle opening up right now as well. So
just be safe out there. Have enough dry powder. It's gonna be a volatile time. Like even though it's green today, who knows what's gonna be like tomorrow? We have TSM tomorrow reporting their earnings pre-market. No surprises there. They release their monthly data every month, but we'll see what their guide is. They control. They are the invisible web behind the digital economy. So
I always say the whole earnings stream shot, you can really understand what's going to happen with Nvidia and others by basically what they say at TSM. Because you'll see tomorrow they're going to say the AI demand is crazy, but you're still going to see that we're still not fully out of the woods with like PCs and phones and inventory burn off. So you're going to see it, and TSM tells you the stories. If you're a trader, I mean, I'm not a trader, I'm a long guy, but like if you're a trader, God, TSMC gives you so many breadcrumbs.
So many sympathy plays are going to come out tomorrow. So like, read that report.
Keep a note of that.
Yeah, 100%.
I haven't used that as a sympathy before, so I'll keep a note.
Oh my God, dude, I talk about it all the time, Jordan.
No, I know, but I
gotta listen. You gotta listen.
If I do anything like that, I usually am doing leverage tickers now, but.
Yeah, you'll have to explain that to me at some point. That's you're speaking a language I don't understand. We can trade notes.
It's fun stuff. Yeah, we'll talk about it next time for sure. But appreciate the whole team, everybody tune in, the whole audience. Make sure you guys are liking and subscribing on the channel, and we'll see you guys bright and early in the morning. Right? Wait, we're not closed tomorrow, right?
No.
Do we have a closure? No. Okay, we're open. No, we're good to go. I think that's next week or something. Or one of the Mondays coming up, I think it is. So
MLK is on Monday, so maybe Monday.
We have all these weird days being closed, like in January, February. So I'm always just like, oh, we closed or not, blah blah blah, whatever. So all good. Everybody enjoy the day. We'll see you bright and early in the morning.